Our market monitor is betting on the consumer and has some stocks she says will rise at least 10% over the next year. She's Margie Patel, portfolio manager at Wells Fargo Funds Management. Margie, welcome. Good to have you with us. You're banking on the consumer, you say, but today's news on consumer sentiment was quite dour, really, relatively. Why do you think the consumer is going to do something that they haven't really shown the predilection to do, and that is part with their cash?
Well, consumers have shown steady improvement in their finances. We have the unemployment numbers gradually improving, here and there improvements in wages. They benefited, I think, and will continue to benefit from energy prices being low, from the dollar being strong. That'll help keep a lid on imported goods. So I think they're in pretty good shape, and I think we'll continue to see their incomes grow, and they'll have the money to spend.
What about the stock market itself? We came into this year with some increased volatility. You think that that's kind of past us and the volatility will be a little bit lower. What kind of a market do we have as we go into the second half of the year?
I think it's going to be more of the same. I think we'll have relatively low volatility, low growth, low inflation, nothing unexpected from the Fed, so more of the same. But I think the economy is gradually improving, and so I think we will see stocks finish higher. And if in the second half of the year we have an acceleration in growth, then I think we have the potential to have double-digit returns from the equity market. So, in other words, a year that might be surprisingly good.
Well, our viewers really want to hear what stocks you recommend, and they really do all come from that consumer stream, I guess I would say. Home Depot is number one. Why do you like it?
Well, I think Home Depot benefits for a number of reasons. First of all, we do have a new home cycle that's gradually taking off. So we have new building construction for professionals. We have a lot of people remodeling, and so that'll be another big source. And in addition, they sell a lot of products that consumers use, lighting, carpets, outdoor products, things like that. So I think they'll benefit. They've been a very good conserver of their cash. They pay a very good dividend, about 2.1%. They have not expanded and used up all this cash. They bought back shares. And they're mostly U.S.-centric, so I think they'll benefit from the trends that are doing well here.
You also like stock with the symbol JAH, Jarden Corporation. They make product I use all the time, the crock pot, but they make other things as well.
Yes, they do. It's a company that's a household, they make household products, but the name itself, the company is not very well known as a household name. They have many of the products that consumers use that have very strong brand recognition. Crockpot, Mr. Coffee, Grill Master, things like that, Coleman camping products that everybody uses and knows, priced at relatively modest prices, so all consumers at all income levels can afford to buy these products. They've added new products within these brands that have strong recognition. They've added extensions of those brands, and although they don't pay a dividend, they've had pretty good growth in their sales.
And we've got about 30 seconds for your final pick. That's CVS Health, which is kind of a double parlay on the consumer and healthcare.
Yes, they've made a lot of great choices. On the pharmacy side, they've stopped selling cigarettes, which I think adds credibility on their healthcare activities. They have growth in the pharmacies, pharmacy benefit management, and in the front of the store, the health and beauty aids, I think, again, reasonably priced products that appeal to a lot of consumers. So I expect that to grow also.
Margie, have a great weekend. Thanks for joining us.
Thank you.
Margie Patel, Wells Fargo Fund Management.